Good afternoon, everyone. I'd like to thank you all for joining us today and express my gratitude to all our distinguished speakers for participating in this conversation. My name is James Robinson, and I'm the Program Manager for the Clinton Global Initiative. This session is part of the third event in Clinton Foundation's ongoing series, Building an Inclusive Recovery. Throughout this series, we've heard from leaders on topics such as small business investment, affordable housing, and today's focus was CDFIs. During this morning's event, President Clinton had two conversations. First, with Governor Lujan Grisham from New Mexico and Donna Gambrell, the CEO of Appalachian Community Capital. The second discussion was with Dr. Raj Shah, the president of the Rockefeller Foundation, and Tawny Brunch, the executive director of Lakota Funds. As with all of the conversations in this seminar series, the discussion addressed how to both realize and reduce racial inequities with particular focus on the role CDFIs play. After the tremendous reception we've had from old partners and organizations engaging with the foundation for the first time throughout this series, President Clinton announced this morning that we'll be launching a new action network. The focus of this action network will be to work with our partners to highlight ongoing efforts and generate new projects to create an inclusive economic recovery. I encourage everyone listening to this event to reach out to our team, share your work, and together we can find ways to collaborate on these important efforts. Now, for this session, providing financial services for underserved communities. The rollout of the Paycheck Protection Program in 2020 highlighted the ongoing challenges that minority-owned businesses face in receiving loans from large banks. Roughly 95% of Black-owned businesses and 91% of Latino-owned businesses face limited access to these loans. Driving investment to minority depository institutions, or MDIs, and community development financial institutions, CDFIs, in historically marginalized communities allows them to directly address their most pressing needs by providing integral access to capital and support for businesses and individuals. Now, speakers will discuss the different roles that CDFIs and MDIs play in providing financial services, access to capital, and resources and small business support by utilizing their ties and status in underserved communities to address their specific needs. During this event, you'll hear from two panels. The first will focus on financial institutions supporting small businesses. And the second panel will pivot to a focus on the future of the economy and the role CDFIs will play in supporting their underserved communities. We'll have time at the end of each panel for speakers to answer some of your questions. So please make use of the question and answer function at the bottom of your screen to pose any questions you have for our speakers throughout the panels, and we'll get to as many as we can. With that, thank you all again for joining us today, and I hope to hear from you moving forward. Now it's my great pleasure to introduce our first panel. Our moderator, Marla Blow, the Senior Vice President of Social Impact for North America at the MasterCard Center for Inclusive Growth. Ted Archer, the Executive Director of Small Business and Philanthropy at JPMorgan Chase, and Richard Romero, the President and Chief Executive Officer of Seattle Credit Union. Enjoy.
Thank you, James. Really excited to be here with all of you today. Thank you so much for setting this up. And I'm looking forward to jumping in and getting some thoughts from this panel and understanding a bit about the relationship between financial institutions and CDFIs and engaging on how we've worked together to solve some of the persistent and challenging issues in this space through the pandemic and through the response to the pandemic. It's an area that we at MasterCard have been quite actively engaged in, and through our work with organizations like Grameen America and Community Reinvestment Fund, Acción Opportunity Fund, just to name a few of our partners that we've worked with very closely and consistently, we have stepped in to enable some relief around digital transformation and modernization of the technology plant, some of the relief for borrowers on interest payments during the pandemic, and importantly, enabling some access to PPP. So looking forward to jumping in, sharing our experience, and also hearing from our distinguished panelists here as well. So with that, why don't we jump right in? And Ted, let's start with you. Thank you for being here. And I just want to go ahead and ask, right, based on what we've seen here, the increased awareness about the importance of CDFIs, the unique role that CDFIs really serve as being the frontline answer for the smallest businesses in local communities. Would love to know what you see as the role of large financial institutions like JP Morgan in supporting small businesses directly and also indirectly using CDFIs and MDIs, minority depository institutions, as a way to help increase your impact at JP Morgan?
Thank you, Marla. Well, first, let me thank you for the work that you're doing at MasterCard at the Center for Inclusive Growth. And thank you to James and the entire Clinton Foundation team. My name is Ted Archer, and I lead global efforts supporting small business expansion at JP Morgan Chase. And our initiatives focus with intention and have for years on unlocking opportunities for marginalized business owners, but in particular entrepreneurs of color, where the gaps are widest and the opportunity for impact is greatest. And it's in this continual search for impact that we've been kind of sharpening our model for collective action and looking to bring to bear the strengths of our firm as a large financial institution. And it takes research and policy, capital, obviously, supplier inclusion, philanthropy, all these things need to come together, in part helping us to connect with the expertise and reach of our community partners to tackle the drivers of economic opportunity, be it housing, financial health, small business ownership, and affordable housing. Zooming in on business ownership for a second, that's why we're here. We know that it's a proven vehicle to generate wealth in Black and other communities. We also know that Black-owned businesses skew smaller and are underrepresented among businesses with employees. But then relatedly, Black-led and institutions led by people of color and underserved people tend to be most proximate to underserved communities, but are also themselves underinvested in, right? They also face the same challenges when it comes to economic security and weathering financial shocks. And if we think about small businesses as the lifeblood of our economy, as the engine, then we have to understand where the veins are, right? As financial institutions, large ones like MasterCard and JP Morgan, we operate as the systems that help the flow of blood. But then in order to get that vital blood to the areas of the body that need it, you need capillaries, you need arteries, you need different parts of the system. And that's where CDFIs and community lenders, MDIs really come into play. And so we know that the wealth in the Black community in particular itself is on a downward trend in 2053 to be zero, right? Only exacerbating the disparity that we've seen and we've experienced during COVID-19. Yet there's an opportunity. There's an important opportunity for us, a bit of a call to action to take advantage of this opportunity to make some progress, to move the needle on the fact that if there was parity, that we'd see more businesses, more jobs, more income for our communities. And it's the minority depository institutions, it's the community development financial institutions who already do more with less. And if they had more resources to support their growth, then they could contribute in even more catalytic ways in the long term. And so lots of financial institutions like ours, like Chase, have relationships with community lenders. But I think it's important that we go beyond transactions, right? Beyond the moment or the gesture, and think about ways to partner, create new models and incentives, that build on existing practices that we have with CDFIs. And I know there are a number of stakeholders on this call listening in, but in order to further enable an ecosystem of support, particularly the ones that serve underserved communities, it'll take some key points of emphasis. And I would say there's some good examples that I could point to. I'll just quickly point to a couple. Marla, you mentioned your work with CRF, your work with Action Opportunity Fund. There are a number of organizations that kind of fit that bill. I'll point to a bit of a collective effort that we've participated in called the Entrepreneurs of Color Initiative, that in particular exemplifies the innovative power of partnering with MDIs and CDFIs. So it's been about 5 years with a number of partners involved in this effort to really name the problem. It's entrepreneurs of color. Depending on where you are in the country, that could look different. But it's been 5 years, about 13 CDFIs participating in this effort. about $50 million in terms of the full program, 500 loans made with less than a 2% default rate. So I only mention this to illustrate the point that you can name what the problem is, and it's capital flowing to the places that need it the most, and also point to success in that the size and the demographic and profile of the businesses range vastly. Yet we're seeing success in the ability of these firms to not only pay back the loans, but find their way to success in the long run. And this was pre-COVID. So we obviously know that COVID is going to have a tremendous impact on what the long-term success of those organizations are. But it will take innovative partnerships like that one and others. It will take an emphasis on understanding and getting new knowledge to help us operate into new ways. So the research, a lot of the groundwork has been laid by financial institutions to do more to uncover what are the needs and what are the ways that capitalization and partnership can really make what feels like something that's nice to have, something that truly is a must have in terms of commercial success for us and our capillary partners. And I think you'll start to see a lot more of that with respect to how institutions are creating meaningful commercial relationships with MBIs and CDFIs to bridge the gap between what we can offer as institutions, who's proximate the most to the problems, then ultimately, as Paycheck Protection Program laid out, how important it is that CDFIs have access, have keys to participate as soon as possible to ensure that the myriad small firms, especially the smallest firms, have the support that's needed to navigate a pretty complex system. So I'll stop there. I think I said a lot, but I'm happy to answer questions when it comes back around to me.
Absolutely. No, thank you for that. And I love that metaphor. I'm going to start using that actually, that those are the capillaries that reach out to where the need is greatest. And I do likely want to come back and double click on this idea of the entrepreneurs of color. I'd love to know what role you played and how you're involved with that. So let's pause. We'll put a bookmark there and come back to that. And let's bring Richard Romero into the conversation. Richard, thank you for joining us and for being a part of this conversation today. And I know that at Seattle Credit Union, you work closely with community that really requires you to have that strong connectivity to be able to get the outreach, understand through your close ties, right? Like what are the trends and challenges that you see? And what are the programs that you've created in response to that, right? You have that mainline connection to hear firsthand what's going on, what are the pain points. Would love to hear how you've responded to that direct input that you've been able to receive and what that's led you to do and maybe what that's led you to do differently in this time as we respond to COVID.
Sure. And first off, thank you very much for having me on the panel. This is incredibly important work. At Seattle Credit Union, we are on the front lines. So we are actively processing PPP loans right now. But to answer your question, access to capital is number one. Before and during and most likely after the pandemic, giving BIPOC businesses access to capital, I think will be the most important thing that CDFIs and financial organizations can do. During the pandemic, while the programs that are out, are helpful, I think when you look at the hardest hit businesses, which are the micro businesses, they are challenged in having the documentation, for instance, the technical assistance that's required to even understand some of the requirements that PPP loans necessitate in order to get approved. So at my credit union, we are often literally providing live real-time technical assistance to a business while we're trying to get them to qualify for federal funding. I think another big issue is trust in the community. We've spent many years building trust with organizations in the community, with CDFIs. We are a CDFI ourselves, and we participate with other CDFIs, so we have good partnerships with not only CDFIs, but also with communities focused in in minority heavy populations. So as an example, we have a great relationship with two organizations that have small business mentoring programs, and we plug ourselves into those programs to provide financial support for them, and not in funding the program itself, but letting a person get through the education process, and then being at the end of that process to provide them with that business loan or with that capital. And a lot of times we will combine our funds with a CDFI's funds in order to give even more capital to that person. A lot of times we are fighting against the actual system we're a part of, right? We have a lot of regulations, a lot of requirements that disqualify small businesses, especially businesses owned by people of color. And so in order to, I'll put this in air quotes, to get around these hurdles, we do have to think creatively and partner with a CDFI who doesn't have the same requirements that we do, because they're working with funding and we're not. But, you know, during COVID, there's just a lot of confusion, a lot of panic. There are micro businesses and small businesses that are trying to figure out how to pivot. You know, they may have had a small restaurant, a coffee shop, and now they can't allow people in. So how do they pivot, and how do they get funding to do that? I've had businesses of decent size, not just micro, come to me and say, I have great opportunity within the pandemic to grow my business, and I need $500,000 to sign these two contracts. And you get into that egg and the chicken issue where, okay, you need $500,000 to get the contracts, but you need the contracts in order to qualify for the $500,000. So a lot of times we'll turn to CDFIs and say, can we join in and try to source these funds for these businesses? And we found success in doing things like that.
You know, I would just love to double click on one of the things you mentioned, which is the constraints, right? That there are some constraints where you're not able to participate, but you bring in other CDFI partners that can. Can you just give an example of what that is and what it might mean if that were relaxed or changed, right? Just give us a little bit more insight.
Sure, and I'll be direct and frank, as I think that's what we need to hear. You know, the financial system is built a certain way. It has been built a certain way, and it's very accessible to people who have resources. So people who have resources are able to continue to build on those resources and create more wealth. Where the system is failing is that same system excludes the people who don't have the opportunity. So I'll just use a real simple example. I could be a small business owner who started a food business with my grandmother's recipes. And I'm just a really good cook, and I'm able to cook all this food, and all of a sudden I have this following and I want to buy a food truck. But I don't have an education around running a business, and I can't afford to hire a CPA to run my books. And by the way, I'm also running the business on my own, so I don't have the time to create the proper documentation for a business. So a lot of times, you know, be it our regulators, auditors, whatever you want to call the people who have oversight over our financial institution, and I'm sure all other financial institutions will come in and want to see the documentation behind a loan.
Yep.
So if we do a loan to your restaurant business or your food truck, and we say, you know what, we've known him for 10 years, 5 years, we talked to him, we really understand his business, no, he didn't have tax returns, no, he didn't have, you know, proper financials, and we gave him the money anyway, that's not acceptable within our industry. That is looked upon as risk that's not acceptable. And what happens is we get penalized for that. We'll get written up in an exam. We can get sanctioned. We can literally, to an extreme, I'm putting this to an extreme, be told to stop lending.
Right.
And we can be constrained. So how do we create a system where it's more open, whether it's CDFI funding that helps us to relax those parameters and be able to get the money to the people who really need it? Those are the things we really need to be talking about.
Absolutely. I think that's a great example. And it's really consistent with some of what we've heard in the Center for Inclusive Growth and some of the work we've been doing, because we all work in financial institutions. We are used to being surrounded by people that understand finance and understand the language of finance. Finance is the business. And in a small business where you might be, like you said, running a food truck or something else, finance is just a means of record keeping. That is not the business. How do we simplify that, right? How do we make that something that doesn't become the exact kind of stumbling block that you're talking about right now? We've been working with an organization called AEO in the interest of creating some automation and some tools that can stand in and play that role, so that the entrepreneur doesn't have to, on the side, while also trying to enable the selling of their goods and services, also run the books themselves, because they're not going to be in a position to hire a CPA, like you said, or even a bookkeeper per se. And how do you, and so rather than force fit that into our construct, what are, we have all these tools now, what can we do that might automate that? So we're doing some hopefully some rapid cycle testing and getting some learnings there by working with AEO and solving exactly that problem, because we got the exact same feedback on what's keeping people out and what's making it harder to access capital is exactly that. So thank you for that. Ted, let's turn back to you. And in 2020, we saw a lot of announcements and a lot of corporate activity around CDFIs. What other support besides the dollars do you see that funds, that these CDFI funds need in order to ensure their success, right? Like, how do we support, happy to see what corporations are doing, MasterCard included, but we don't want this to be a 2020 phenomenon and somebody looks back one day and says, oh, this is all that 2020 stuff that we did and it's still sitting around. How do we get this really integrated into the corporate structure?
That's absolutely right. I think what we've seen to a large extent are really great intentions that speak to the critical nature of where we are, where our communities are, and the fact that it's no longer okay to sit on the sidelines. And so there's a lot of reason to be optimistic. The way forward and the way for us to ensure that this is not just a flavor of the moment, that it is truly transformational, is to fully integrate these sort of visionary statements into the way we do business. And that means running our businesses, moving forward in such a way that all of our decisions, the way that we generate value for our company and our shareholders is always inside the context of what's good for community. And so part of what we've done at Chase and what others have done to the credit of many corporations is lay out what the path forward is. And in fact, our way forward is called Path Forward. We have a very, very robust 5-year vision that says, we're gonna pull forward all that we do within our company to ensure that we're addressing the racial wealth divide. So inequity itself is what's holding us back. And if we can align our resources with what's ailing our communities and address those problems, then we'll be in really good shape. So in particular, that does mean aligning what we have in terms of our relationships with our local partners, community lenders like CDFIs, and bridging them in ways that connects what's happening on Capitol Hill, at state houses, et cetera. And I know that many who are sort of inside the four walls of the CDFI space will be happy about what's happened recently on Capitol Hill, where the Department of Treasury has really leaned in and said, what's happening with the stimulus, what's happening with recovery has to have CDFIs and MDIs at the center of it. So there's capital being made available now in ways that never was before. It also means that the FDIC, an agency that regulates quite a few banks and MDIs, has also leaned in to say that we're gonna create a roadmap to make it easier and more tenable for financial institutions, large institutions to work with and partner with smaller organizations, with CDFIs and MDIs. Those things are the culmination of work across many years, but it just so happens that now is the right time to really illustrate why those arrangements can be really impactful. There are a couple of things just really to point out. We know that the most important, and Richard touched on this, what do small businesses need the most? It's capital. That's the place to start. They need growth resources. This is also true, of course, for community lenders and CDFIs, who are instrumental to the effort to support small business, but they also need ways to generate revenue. So partnerships with larger financial institutions to find ways to generate revenue, super important, right? Having a sustainable path to stay afloat is really important. The other piece is building capacity. So a number of financial institutions have both in-kind and investment support, where everything from understanding ways to sort of train staff, to bring staff capabilities to the highest levels, such that there are cadres of leaders in every community, at financial institutions in every community, that can be the next leaders. I mean, those are things that are truly important to the sustainability of CDFIs and MDIs. And then last but not least, it's just an emphasis on community and community impact. Community lenders, mission-based lenders, all have that as a core part of why they are in business. And it's important that we find ways to align with, we meaning financial institutions, find the best way to align on where we see impacting community, right? And that's across large institutions. So it means that we can compete at the large institution level for customers and for clients all day long. But when it comes to community and where we see areas of collaboration, we should really lean in there as well. And this year has been a great way to sort of see some of those models, efforts happening across different corporations in ways that I've never seen before. So I think those are ways to really integrate and institutionalize how companies not just make grand gestures, but really integrate what it means to address the racial wealth divide through how we do business.
Absolutely right. I a lot of that resonates with what I've seen internally, and part of the work I've been doing at MasterCard is going and partnering with other parts of the organization, so that this is not the MasterCard Center for Inclusive Growth does this kind of work. It is MasterCard does this kind of work, and finding relationships with our treasurer, for example, right, to get him involved in thinking about how the money that's on our balance sheet can be activated and applied in ways that, without adding risk, right, without taking meaningful market exposure or idiosyncratic exposure to any particular entity, there's an opportunity to put that capital into places where it matters and where it can be activated and move the needle for some of these capillary organizations, as the way you described it, Ted, to use your language. And getting that buy-in at that level in other parts of the organization is part and parcel of what I'm calling kind of mainstreaming this work inside of the corporation, right? So before we go to the Q&A, let me ask Richard, just you heard Ted lay out a number of opportunities to partner and work together. What would you're talking to an audience here that has opted into a conversation about CDFIs. What's your ask of this audience, right? What would you like the people listening today to take as their first steps to forming partnerships and helping you and working with organizations like yours to make a meaningful impact on creating a more inclusive economic recovery?
I think the key here is speed. I think we're out of time to help a lot of these small businesses. The pandemic has just created an incredible situation where it's a matter of days before these businesses are folding, or a matter of hours, whether it be an emergency that they have that was just compounding on top of their financial situation. How fast can we get funds to people without creating all this red tape? How fast how well can we communicate the programs that are available in a real simple way so people understand what they qualify for and aren't afraid or feel like they're not, why even bother? The other issue we have too for smaller financial institutions, especially MDIs, is resources. As an example, we process PPP loans. We have one point person processing PPP loans. So it's I think it's a great program in many ways. But when that floodgate opens, we can only open a little bit of that faucet to let it drip into our institution. And we're, right in the middle of an urban area that needs a lot of help. So how can we support institutions, whether they be CDFIs or MDIs, with resources to be able to provide the technical support, to be able to get temporary staffing, to be able to process these loans and get them in and out, to help people understand whether they qualify for forgiveness. To me, it's just time, and I think we're out of it.
Mm-hmm. That is really hard to hear, but sounds like the painful truth of where we are and figuring out what we can do to save as many as we can. I think touching on your point, Richard, there's a question here from the audience about small rural CDFIs. You mentioned being in a major urban area, but how do you think your organization and smaller financial institutions can tap into, and how have you partnered with organizations, let's say the size of a JP Morgan Chase or the size of a MasterCard, to help you deliver on some of what you've mentioned? Are there things that you have seen work so far that you would recommend to some of the other members of, CDFI members of the audience here?
I can't speak to rural. Unfortunately, I'm in a metropolitan area. As far as partnering with large CDFIs, we've mostly partnered with small ones. We do partner with them in a sense of, people that we can't help, they can usually help. There is an opportunity for us to invest into a CDFI locally, as an example, that will lend our money out to borrowers under their underwriting parameters, which are a lot more forgiving than our parameters are. But I really don't have a solution for partnering with large CDFIs.
Yeah,
I haven't come across that yet.
Yeah, it's a challenging one, certainly. I think from our perspective, one of the reasons we work with organizations that act as a kind of gathering place or that kind of assembles groups of CDFIs is for exactly this reason. It's really hard for MasterCard to reach individual CDFIs in an individual location, but through organizations like CRF or AEO, OFN, some of the others that can aggregate and bring together groups, it allows us to deploy technology, deploy training and materials and information in ways that will reach many. That just gets really hard for MasterCard to do from, kind of from where we sit and what we can see. We need those eyes on the ground, like Richard was saying earlier. Ted, anything you'd add to that on the rural and smaller CDFI front?
Yeah, I would just underscore, and maybe the next panel could even touch on that with Inez and Ellis, but there are a number of intermediary organizations that help bridge that gap. Inez is a part of one, actually multiple. Inez and Ellis are part of multiple intermediaries that sort of aggregate CDFIs led by people of color in particular. And so those organizations also need the support from other CDFIs and corporations to bridge some of those gaps. So I think it's a good point to raise around intermediary groups that could help connect CDFIs to support groups.
Yeah, that makes sense. While we're on you, Ted, let's go back to your comment earlier about the Entrepreneurs of Color Fund. Would love to just hear you expand on that a little bit and talk about what relationship you ended up building there. How did JP Morgan Chase participate? Where are you a part of the capital? Are you a part of the establishing the infrastructure of it? Tell us a little bit more.
Sure, and it is an open platform in that partners are welcome. We take great pride in being among the important investors and architects, but this is an area where collaboration really is key. And it's part of the DNA of what the initiative is. This Entrepreneur of Color Fund initiative really is born out of our work about 6 years ago, starting in Detroit, Michigan, where the Kellogg Foundation and a number of local actors, including the Detroit Development Fund, had identified critical gaps in capital using quantitative and qualitative data, stating that, look, between capital tranches of $50 to $150,000, there just wasn't enough of a vehicle, wasn't enough of a mechanism to get entrepreneurs who were ready, right, who had growth resources around, market access, had, capital from, had contracts with the city, right, that was rebuilding. This was a couple of years after the bankruptcy and the financial crisis in Detroit. Businesses by the hundreds who were prepared to take on growth opportunities, just not enough of a flow of capital to both meet their needs and sort of qualify in a way that small community lender could address. And so between the Kellogg Group, Kellogg Foundation Group, JP Morgan Chase, and other local actors, we generated this kind of on lending strategy to really capitalize, local CDFIs who had everything they needed in terms of the ability to get to their customers, to support them with ongoing support before you receive capital and then after, to make sure that you're staying on track. All they needed was a little bit of kind of support to help connect the dots between other lenders, capital providers who could on lend, and then obviously the ability to share information about how you support through banking relationships small businesses once they receive capital. Yeah. So that's been our approach, beginning in Detroit about 6 years ago, and then extending that to other places around the U.S. and continues in places like Chicago, New York, DC, in San Francisco. And this is it's a free model in that there have been obviously CDFIs who've joined the collaboration, but it shouldn't end there. There should be an opportunity, and there should be an appetite to take up this model and to implement that in a way that's open source. And we're of course happy to share that model and to invite others to join in as on lenders to the CDFIs, on capital providers to the CDFIs, but then also support the innovation around products when it comes to helping CDFIs provide capital in ways that they haven't before. So CDFIs who don't offer lines of credit and working capital in new ways, this is a way to generate additional capability in those places. And to get some of the support that you need to make sure that you're innovating your products and services.
Okay, thank you for that. And that is going to take us to the end of this part of the conversation. So Ted and Richard, thank you both. This has been fantastic insights. As I mentioned, will continue using this term about capillaries. I think that's a wonderful way to describe it. Richard, really appreciate your feedback from what you're seeing directly and with your sort of lines out on the ground in your local community in Seattle. It's wonderful to hear that we are doing some of the same things and that is meeting the needs and challenges that you're hearing about. That's always gratifying to hear as well. So we will stop there and turn it back over to James. There is one more question in the chat that maybe the next part of the panel can take up if there's interest, about moving beyond just loan capital and the liability side and thinking about equity capital as well. We won't have time to go through that one here, but we'll leave that for the next group. So thank you very much. I enjoyed it. I look forward to hearing the next panel. James, back to you.
Thank you very much, Marla, and thank you, Ted and Richard, for participating in this panel. It was great to hear all of your different perspectives, and as Jan Piercy said in the chat, it would be great to have future sessions about the strategy, impact, and motivation for the work that you're doing at JP Morgan at the Center for Inclusive Growth, and more of the work that credit unions play. For our second panel, we're going to hear from 3 leaders of CDFIs from around the country. They all represent various communities, and I'm thrilled to now turn the second conversation over to Inez Long, the President and Chief Executive Officer of Black Business Investment Fund Florida, to be joined by Della Clark, the President of the Enterprise Center in Philadelphia, and Ellis Carr, the President and Chief Executive Officer of Capital Impact Partners. Enjoy.
Thank you, James, for inviting us here this evening and for allowing us to be a part of this great discussion. So the next session, we're going to talk a little bit about the future of CDFIs for underserved communities. And I have with me today in that discussion, Ms. Della Clark, who's president of the Enterprise Fund, the Enterprise Center, and Mr. Ellis Carr, president and CEO of Capital Impact Partners. So we're going to start with you, Della, and we're going to talk initially about the PPP program and the key challenges and future access as it relates to PPP. PPP was very difficult rolling out in the first round, and there was a whole lot, I'm sure, that you learned in your experience from that first round rollout with PPP. Could you talk a little bit about your experience, what you learned, and what you are doing as a result of that experience now that we're going into our second round? You're on mute.
Thank you, Inez. It's a pleasure to join you and Ellis as cohorts on this panel. We learned a lot about the PPP the first round. First, it was first come, first serve. It was speed to market. And it really required a strategic coordination at the local level. And we didn't do that in Philadelphia. And so when you looked at the number of loans that was applied to PPP in Philadelphia, minority enterprises, Black and brown, got very little of that. And part of it was because we didn't organize and we were only processing what came to us and we didn't have a coordinated effort. So this round, we started before the former president signed it on December 27th. We started with a Get Ready campaign. We started telling our clients to get their documentation ready. We started a major campaign because we wanted to figure out how we could improve. And so we calculated that for every 2,000 applications, we could potentially bring in $100 million in Philadelphia, and that has been our goal. And so we started organizing service providers. We started organizing the small businesses. We started doing what we call application walkthrough. Thanks to the digital platform, we were able to put our application on the screen, walk people through each single field, show them how to complete it online so that when they got in front of their own computer, they would be familiar with the documentation. And it has quadrupled the number of applications that we received. The other thing that we didn't focus on was processing. We focused solely on the applications and we switched investment in processing to application because we knew once we got a stack of application, we were a game changer, and that's where our focus have been since PPP was announced in early part of January.
That is extremely innovative to focus on the processing in where there is so much of a need. Kudos to you guys for doing that. Ellis, let's talk a little bit about Capital Impact Partners and the way you have engaged with partner organizations to help provide technical assistance to small businesses, getting them ready for the PPP funding.
Great, thank you, Inez, and great to be with you and Della today, and James, and just want to thank James and the Clinton Foundation for hosting this important conversation. So Inez, thanks for the question. I'll give a little bit of context on Capital Impacts, as I think it'll set the stage, answering your question more directly. So Capital Impacts is a 40-year-old nonprofit CDFI, and our mission centers around helping people and communities break barriers to success. And we achieve that mission by lending, investing, and developing programs that provide high quality healthcare, housing, food, and education in underestimated communities across the country. Over the course of our history, we've invested in nearly $3 billion in communities across the country, serving nearly 5 billion people. And so, as in the first in the first panel, there was a lot of discussion around collaboration. Della mentioned it as well. And really our work has been foundational and our impact has been foundational and critical to achieving that impact is around developing collaborations with other CDFIs and nonprofits. And so in the midst of the pandemic, we initially went to our CDFI partners who we collaborated with. Ted mentioned the Entrepreneurs of Color Fund earlier, and Capital Impact is the fund manager for the Entrepreneurs of Color program in the DC region. And we worked with our CDFI partners to provide kind of immediate grants to businesses that needed immediate relief. Additionally, for the last 5 years, we ran a statewide food program in Michigan called the Michigan Good Food Fund, which is really around creating opportunity for food entrepreneurs across the region, really focused on addressing food deserts and developing a sustainable food economy. But for both of those programs that we had served in fund management capacity roles or intermediary roles, as was alluded to in the first panel, we were able to channel over $1 million of grants to both CDFI partners directly to small businesses that who are in need. And really, Inez, I guess the way that we thought about it really is around 3 specific phases: around immediate relief, recovery, and then really helping to businesses to be poised for this transformational time period. One other thing I'll just mention as it relates to partnership that is really significant for us as an organization is last year we announced an alliance with CDC Small Business Finance. They're the largest, one of the largest, nation's largest SBA lenders that's mission focused, and really coming together to create an alliance to create holistic community and economic development at scale. And we really kind of came together really before the pandemic hit, but it was really important for us to partner to support the many small businesses that were ailing. Because what we found through the pandemic and then through PPP is that there's a distribution problem, right? There was plenty of capital or availability of capital, but it was not flowing, as Della mentioned, to communities of color, particularly entrepreneurs of color, and we needed to do something about it. And I think CDFIs really stepped up to the plate to really be able to address that. Specifically, CDC provided over $180 million in PPP loans directly. They provided TA to over 7,000 businesses in 2020 to really provide them the support that they needed. That included everything from hosting daily webinars to helping people fill out PPP applications and the like. And now they're even working to help folks on the forgiveness side. And so in addition to the immediate relief, we've also focused on the recovery. CDC Small Business Finance and Capital Impact focused on 3 specific cities, DC, Detroit, and LA, as a way to really help provide small business loans or SBA loans, which had a number of benefits embedded in them, including guaranteed P&I payments for 6 months from the federal government and the like. And so we really use this also as an opportunity to help businesses that were actually beginning to recover or closer to the recovery phase coming out of the immediate relief. And lastly, we've been focusing in our positioning for transformation, because there are a number of businesses, as were mentioned in the first panel, that are thriving in this environment, and we want to be able to support them so they can better support their communities and build wealth and job creation in those communities.
Right. And there's one thing I want to mention. I think it's important that there's CDFIs listening in that are not processing PPPs. They can still get involved and help their community and their cities with application and work with banks and sign a agent agreement and get a 1% referral. So, because we need to make sure that all our major cities help minority, Black and brown get PPPs this time around.
Absolutely. And Della, I was going to come back to you on that, because I think that what you're doing is very exciting in that you're getting in on the front end, which means that, as Ellis is talking about, the partnerships and the collaboration, it allows you as a CDFI to partner and collaborate with CDFIs such as Capital Impact Partners and others that are actually processing the loan applications. If you're in on the front end, which is an excellent model, I think, as you're stating, for CDFIs that maybe they don't want, or that they're not in the processing business, but they could work with CDFIs that are in that, and we can impact our communities in a greater way in a collaboration. So those are just excellent models that both of you guys have spoken, and the impact that you both are doing. All right, so would you like to, either one of you like to add anything else to that?
But just briefly, Inez, and I think it's a really important comment that both you and Della hit on, and actually was talked about briefly in the previous panel. You know, as you all know, CDFIs operate in every state across the country. What makes us unique is the fact that we are embedded in the communities.
Yes.
And the ability for us to partner together to continue and to build the trust of the community by providing scaled solutions for PPP and others post-pandemic is going to be really key. And I think this is an opportunity, as was alluded to earlier, for us to take this moment for that reason.
Absolutely. And that sort of leads us into our next topic, which is growing the sector to better serve communities. And the previous panel sort of left us with an unanswered question regarding equity. And I would like for you guys to consider that when we talk in this particular on this topic. Currently, we're seeing an increase in attention and investments in CDFIs. And Della, I'm going to start with you again. How can organizations like yours and others take advantage of this opportunity to increase your CDFI's capacity and to work more in your community?
Well, I must admit, I thank George Floyd every day, because it woke up America in a number of different ways, and it has helped our liquidity, because we have received what I call more patient and more unencumbered dollars that have allowed us to build our balance sheet, improve our debt to equity ratio, and our liquidity at the same time. Whereas that had been a struggle prior to his death, because there has been more thoughtful conversation around helping CDFIs build their balance sheet so they can serve their community. We don't need to be in a position where we're financially induced by the pressure of our debt to the point that we can't provide our mission and serve it because we're struggling with our own debt. And so I think that this whole conversation is changing the paradigm on that conversation. And as it relates to equity, we have to have more conversations about equity, because when if we're only adding to our small businesses the capital stack of debt, then we're putting them in that same position where they're financially induced by the pressure of their debt that they can't grow. So having blended capital as a CDFI is so important for financing the future of both the CDFI and the small businesses that we serve.
Absolutely, absolutely. And Ellis, if I could just please ask you to give us your thoughts around this subject matter as well.
Sure, Inez. I have similar thoughts to Della. I mean, I think first and foremost, I think CDFIs and the next stage for CDFIs is to develop a new asset class within the financial services sector, which is basically the emergence of a new class called alternative financial institutions, and which has diversified capital that can really provide to their communities, in service to their communities. And ultimately, that's where I think Capital Impact and through the Alliance with CDC Small Business Finance is headed, which is to develop an alternative financial organization that really can provide a range of products in service to the community. And I think that's the real difference the way we're thinking about it, because to me, CDFIs really kind of straddle the line between communities, right? On kind of the Western hemisphere, and on the Eastern hemisphere is efficiency, which is the capital markets. And so but we are also always in service to our communities. And what we're really looking at this as an opportunity to do, particularly because with the federal funding that was mentioned earlier, and because of additional commitments throughout our sector, is really to play a role and kind of to apply the servant leadership model effectively to the way that we do work. And that really means not letting capital drive the conditions, but we start with the community and let the community drive the conditions, which we help to support them. And then we go raise capital and leverage our capital to really ensure that the community's vision for itself is actually happening. And so through our focus within the Alliance with CDC Small Business Finance, we're really trying to create capacity amongst and across our sector by providing technology, by providing our technical expertise, as you guys mentioned, in capacity building. So folks who might not be as versed in providing small business lending, but they are embedded in communities, how can we help them to do that? And how can we help disintermediate capital so that they don't have to, right? And so we're really thinking about how we can help grow the sector, but also be able to go back to one of our core principles, which is testing locally and scaling nationally. I think that's the way that we have to move forward, because as I mentioned in the first panel, doing the same thing over and over again is going to get you the same result. It's not going to get you a different result. And we know that so many people have been left out of the traditional capital markets or credit markets. And it is our job as CDFIs to really help bring them to the mainstream.
Absolutely. And I also believe that for many people that are in the Black, Indigenous, and people of color communities, there's just no equity in some of these communities. And if we're really going to change the paradigm of no wealth, low wealth, we've got to be able to raise equity to inject in those communities. We cannot saddle many of these folks with just debt. So
yeah, I was going to say, Inez, and thank you for saying that. I mean, we realize that as well. And, I think as a number of us have been steeped in this for a while and others are becoming closer to it, the focus on racial equity, as you really look and understand that, the implications of that, right?
yes.
You need an equity product to be able to bridge that gap. And so Capital Impact has done about $40 million in equity investments over the last several years. We're actually creating a new line of business that is focused on just that, providing equity capital to those deals that can't get done today, that we traditionally provide debt in. And so the goal for us is to be able to leverage private sector dollars to couple with our own balance sheet capital to be able to further efforts in Black and Brown communities across the country.
Absolutely. And Della, I know you have some thoughts around that based on some of the work that you're doing as well.
Yes, we also are starting we've been doing small amounts of equity, but that is now growing because we are in the process of working with SBA to go after a small business investment company license to start an SBIC. And I'll be candid, one of our biggest challenges is that as first-time fund managers and emerging managers, you can't get over that past performance, I think some of those doors and the glass ceiling on that's going to have to be broken to allow us in, because we don't have the track record of having worked at previous private equity firms in order to get started in this business. And so we're planning to break some of those glass ceilings, because once we actually get our license, we're very excited about how we're going to bring equity to not only Philadelphia, but help other, keep our foot in the door so that you, Inez, and everybody else can come through, so that as a CDFI, as Ella said, we can start a whole new asset class to help our clients grow.
Absolutely. It's like, having a toolkit and having all sorts of tools in your toolkit to help the community. That is the only way you're going to change the paradigms that we see in our communities right now.
Yes.
Very good. Thank you, guys. As we come to the end of this session, we have one final question for both of you guys. As we see growth in the CDFI sectors, how can we, individuals, small businesses, and even large corporations make a concerted effort to support small CDFIs serving underserved populations throughout the country that have a great impact on their communities, but limited access to funds and resources?
Well, I'm going to direct my comments to if there's any funders listening in, because we need to structurally change the RFP process and the open application process. Because the only way those of us who have capacity as a CDFI, we need to be encouraged by the funders to collaborate more and reward us for collaboration with the smaller CDFIs. But the way these applications and RFPs are written out, it causes us to compete rather than collaborate. So I'd like to see infrastructurally this whole process of funding be modified and changed and represent kind of the new economy, the new way of thinking and a new way of collaboration. It has to be encouraged at the funding level because it doesn't organically happen at our level because of the competition to compete.
Yes, yes. So really when a lot of the funders are looking at CDFIs or thinking about the communities that they want to impact, they also need to consider CDFIs that are serving those communities. CDFIs has got to be strong as possible to really to be able to make a difference within the communities.
Yes, yes.
I completely agree with both of you. I think that smaller CDFIs most of the times are at the epicenter of the community. They're at the nexus of the work, and they need to be not only empowered, but supported financially to make that happen. And I think it is, we continue to talk about collaboration. It's probably an overused word, but we need to work together more. And as a larger CDFI, we have recognized that there are parts of the work that we are not going to touch, but it is squarely in, because it may not be our skill set or expertise. And we've learned that through partnership with other CDFIs that we can create an ecosystem that really helps support the community. And I think it goes back to your point earlier, Inez, around how do we play our parts to really help serve the community, to provide a diverse set of offerings. And that means that you all, right, and other CDFIs need to be supported like a Capital Impact does.
Yes,
Yeah.
yes. So we have a couple of questions that have come in that I'd like to read. This question is for Della. How did you do your application walkthrough for PPPs? And did you use technology to assist with that?
Yes, we think that the digital environment is working very well for PPP this time around because you can literally, share the screen, put the application right up on the screen, and everybody in 1 week's time in Philadelphia, we trained 1,200 entrepreneurs on application walkthrough. We also brought together all of the service providers, the Chamber of Commerce's, bookkeepers, small businesses who worked with other small businesses as their client, because one of the other issues with the first round of PPP is that the smaller businesses were getting conflicting information. They go to one person who tell them they wasn't eligible, they go to someone say they were, and it was a lot of conflict. So we wanted to make sure that service providers were singing the same tune and disseminating the same information. So we got a law firm in town to actually provide that information to all of the service providers so that the information that was disseminated was consistent. And the digital, and we did it all by Zoom, all by virtual platforms.
Awesome. So have you guys found that the change in the way the second round of PPPs are being rolled out is impacting your ability to get the deals done or processed in a positive or a negative way?
I think organizing ourselves locally. When you see the name Federal Payroll Protection, I think most people think, well, the feds should do this, but we have to thank them for approving it, but it's up to us at the local level to organize and garner support at the local level in order for it to really work. Because otherwise, if we don't use that money, Congress is going to take it back. And I can tell you, it is the best thing for Black and brown businesses right now for 3 reasons. One, it's a recoverable. If you spend it like you say you're supposed to, you can get it forgiven. Secondly, it's tax-free money. Okay, you don't have to pay any taxes on it. And then thirdly, it's coming at a time when, as others have said, small businesses are collapsing. This is one way that we can flood money into our community and keep them afloat until the next stimulus come out or till the economy turns around from the vaccination. So I can tell you in Philadelphia, we're like a dog on a bone.
Ellis, there's a question here for you. I'm going to try and read it.
I don't think I can beat that though, Inez.
I know. So the question says, Ellis, what is the next step to act on your recommendation? I think it's talking about strategic inclusion of those who could move this forward with strategic inclusion.
So I'll try to go back and think about what recommendation that relates to. I would assume that it was in reference to my kind of position around like where the industry is headed and really kind of bring partners together. So I think in terms of we think about inclusion in a number of different ways. I think we as CDFIs have collaborated and will continue to collaborate. We need to do more of it and more intentionally, recognizing all the strengths that we all bring to the table. I think as it relates to kind of connecting our combined distribution system, if we think about ourselves as a distribution network, with capital, I think that there are two main channels that we need to continue to kind of go after. One is on the institutional side, which is our bank partners who were on earlier, and corporations, which is newly emerging for CDFIs in particular, and then also insurance companies and the like. And then the other is another, I think, burgeoning group of potential investors for CDFIs, which are individuals. And there are a number of CDFIs who have created like capital impact offerings that retail investors can invest in by going on their Charles Schwab account and investing to support us, who then we can support our communities. And I think there is more that we can do. And you've seen other aggregators like Marla mentioned around OFN, CRF, and others who have aggregated capital and use that as a disseminating tool to other CDFIs. So I think it's been happening. I think we need to continue to educate the investor market that we are a more than worthy asset class to be invested in, both debt and equity. Earlier, to really allow us to serve the communities like they need to be served and like they deserve to be served.
Yes, absolutely. Absolutely. There's another question that popped up. I'm going to try and read it. It's rather long. It says, it's not directed at anyone. It says, how should we build for the continuum of capital with mentorship that we know entrepreneurs of color need for micro lending to early stage impact investors, supply chains, and more to build the ecosystem better going forward? It's rather long.
Yeah.
So I think I could go ahead, Della, if you were going to jump in. I'll go ahead.
If I may not answer this question directly, but I'm going to give my perspective on it, is that when you look at America, the majority of the infrastructure is built for microenterprises. It's not a path that is laid out from microenterprise to macro. And we have a gap there in terms of growth capital, right? Because micro funding can only take you to a certain level. And so as we think about the ecosystem and as we think about everything that impacts the growth and development of a business, and particularly a minority enterprise, one of the challenges that we have run into, again, going back to funders, is that they provide us capital for programs, okay? And if you look at it, you know, a CEO of a small business, if they spend all their time in program and we're pushing programs as service providers, then where do they get to operate their business? And where do they learn through the one-on-one coaching and experience? Because non-minorities don't go through programs like we do. You know, there's always a cohort for us. Non-minorities don't do that. They get investment capital, we get programs. So I'd like to see another fundamental shift, right? In taking micro enterprises and redoing that whole model so that we can put them on a scale. Because when you look at our poverty level around America, it's because we don't have enough minorities that look like us that can hire people that look like us. Yes. And I think the only way it's going to happen is, as people said, I'm reading this book, Burnish, which talks about most cities have mice. They don't have big elephants. And we need big elephants that can carry a lot of people and drive the change we want to see. So I am pushing less programs, not saying that they don't need coaching, not saying they don't need help, but it needs to be delivered in a different way.
I agree with that 100%. I know that our focus, our target market are Black businesses, but all of the Black businesses that we serve are not micro businesses. And so when the folks that can hire 30 people or whatever, we don't have any tools in our tool kit to help those businesses. Maybe they need a $700,000 line of credit, you know, or something like that. So I agree with you 100%. We have, as CDFIs, we've got to have all sorts of products to help grow our businesses to larger sizes and stop accepting that everything that we do has to be for the tiniest business on the planet.
Right.
Yeah,
And small amounts of capital produce a small business.
Yeah.
Totally agree. And I think from our perspective, we've focused on, I was just think of a subset of a small business that we work on with is minority-led real estate developers. And to your point, Della, we've created a cohort approach in 2 cities. But what we've done is we've created that cohort approach around training, but we also put our capital up to bear, right? We've created specific lending programs for that cohort of folks. And I'd say the second piece of this, which aligns to your question or your comment earlier, which is many folks in African-American and Latinx communities don't have the same network of folks to go to get that capital. Yes. What we're trying to do is leverage our power and our relationships as an organization to bring different classes of investors to really kind of invest directly in those businesses, but also to invest in those projects. And so while the cohort serves as a model to train, but it really is a way to connect to real mentors and real advocates who will actually invest over time alongside with us.
Right.
Yes.
Yeah. Yeah. Yeah.
Well, thank you very much to Inez, Alice, and Della. Those were it's wonderful to hear from all of you. And I hope everyone who's listening in today was inspired as much as I am by this conversation and the possibilities of future work that you have all suggested, as well as to our first panelists. I want to thank them all for joining as well. A special thank you to Inez and Marla for moderating and guiding these discussions. And a final thank you to everyone who attended today. This was the 3rd session or 4th session of the day. And I want to thank everyone for joining not only this one, but the other sessions that we had earlier this afternoon and President Clinton's session this morning. Finally, I want to encourage everyone listening to engage with the foundation further. As I mentioned at the beginning of this session, we are in the process of launching an action network on inclusive economic recovery, and I hope you all stay tuned for more information about this launch and reach out to myself or anyone else from the Clinton Foundation team to learn more about this work. It's been a long day, and finally, one final thank you to all of you for your time, participation. I hope those of you on the East Coast are not too hampered by this snowstorm that we've been receiving, and thank you all for your time.
Thank you.
Thank you. Thank you, James. Thanks, Della. Thanks, Alice.
Bye-bye.
Thank you.
Bye-bye.